This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now in China, economic activity slowed more than expected last month. Retail sales, industrial output and fixed asset investments all missed forecast. Well, fresh coronavirus outbreaks are adding new risks to China's recovery, which has already been hit by floods and faltering global demand. Well, with us now to talk about China and the perspective from China is Keyu, Associate Professor of Economics at the London School of Economics. Keyu, thank you as always for making time to speak to us. When you look at China and some of the data points that we actually just have talked about, how much of it is lockdowns and so that China can pick up very quickly, or how much of it is it, more sinister, deeper rooted concerns?
I think a lot of the slowdown is really structural. I don't think it's just temporary. The Delta variant, of course, it has to do with a very, very strict policy of almost, keeping zero cases. That's really not quite feasible in a globalized economy like we have today. But there are also structural downturns. There are concerns about financial stability. There's concerns about property markets. Internal consumption demand has been weak because of uncertainty, because actually the pandemic has really hit hard a large portion of the lower income households. And so we're seeing that reflected in the data.
I mean, the PBOC has put moves in place to reduce some of the funding that was predicted by analysts to try and stabilize the economy and also boost growth. Do you worry about a policy mistake coming from PBOC?
I think that there's room actually to ease monetary policy further, given the fact that there are these immediate economic growth slowdown concerns. There's also structural concerns, and we really want to shift the burden from fiscal policy back to interest rate led a market equilibrium on growing consumer credit that is healthy, healthy credit growth for robust businesses. All of that, there's substantial room for that kind of monetary easing that could really substantially boost the economy in the short term.
I wonder what your take is on the Afghanistan disaster and what China can do about this. Is it an opportunity, you think, for the Chinese, or should they be concerned right now?
Well, Chinese policies surround, balancing its geopolitical concerns. I think it could be an opportunity for China. China's policy today is really to make as many friends as possible and to avoid tensions rising and to kind of spread these risks, diversify the risk around the world.
How successful has that policy been? I mean, as they push their bridges and roads policy up through Africa into the south of Europe, how successful has it been?
Well, it's been hit. The pandemic has hit everything, of course, all these plans. If we look at the data, there are, $1 trillion worth of infrastructure deficit around the world, and somebody has to fill in the gap. And China has done, to a certain extent, done some of that job in Africa and all parts of the developing world. The Going Global Belt and Road project is still very much part of China's momentous project. But of course, there has been a significant slowdown. Also, there's concerns about capital outflows. Trying to keep capital inside and trying to stimulate internal demand has been the recent focus.
Speaking of things the pandemic has hit, when it comes to trade, of course, there is still the port, the third largest container port in the world, closed partially in China because of a Delta variant case there. What implications could that have for Chinese trade?
We're concerned because of China's very strict policies and how long that will last. And that will definitely hurt Chinese trade and bring about greater uncertainty and actually probably accelerate, detracting trade and removing trade to other areas. So I think that, it's in everybody's interest to keep a looser policy around the pandemic, but it will take some time before the government will actually want to implement that.
And trade, of course, has been an area of tension between the world's two largest economies, China and the U.S. If that relationship deteriorates further, what would that do to accelerate potentially the deceleration in the Chinese economy?
Well, China has been pushing for independence, for internal economic growth drivers, technological independence, etc., because it is bracing itself for greater geopolitical uncertainty, whilst it wants to still put a priority as, creating a harmonious environment with the U.S., at least keeping it as stable as possible, it is prepared. But let's not kid ourselves. China is thrived based on global economy, and the government recognizes that. So it would do at the same time promote globalization, do at its possible extent trade and financial flows, etc. Meanwhile, really pushing hard on the domestic economy.
Okay, given Beijing's 5-year regulation plan and the fact that it is going after certain sectors, is this going to be a new China emerging, or is it just that international investors didn't quite understand what China was wanting to do?
I don't think that Chinese understood what China was wanting to do, and neither can anything really be predicted even in the next year or so. But policy reform uncertainty has been around forever. Entrepreneurs have to be skilled with these jungle surviving abilities to predict and at least be nimble enough to respond when policy changes, and that will continue. I don't think it will kill the entrepreneurial spirit. The Chinese market is so huge that you can be a very successful company, but you have to tread the line and toe the line and be in line with government policy. But that's also been true when there were industrials, commodities, manufacturing, all sorts. It was just the same thing.
Keyu, thank you so much, as always. Keyu Jin there, Associate Professor of Economics at the London School of Economics. Now, coming up a little bit later today, we'll be speaking with Eurasia's Group China